Hey traders, John Hal here. Happy Easter to everyone. Markets have just finished. We just finished trading the markets. And there's actually two things that I want to share with you. One, I want to share with you when it comes to actual stock market. And two, I actually want to talk about the banking sector right now and the actual trading of the banking sector. Something I was just talking about with my private clients that I think is really important for you to understand about your trading the markets that I think a lot of people didn't really understand in yesterday's video. So I want to clarify that in today's video. Let's get straight into it. Don't place a trade based on what you're seeing in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, if you haven't done so yet, I'm giving you a free membership access. See that trading course right there? No matter what you need help with, guys, it literally is a full trading course, right? There's like something like what? 7 or 8 videos in total in that trading course. It goes for like 4 or 5 hours long in total. Foundations, biggest mistakes, chart reading, my trading system, everything you need, guys. Just go get the help you need. Link in the description, or first link in the description there. Now, a few things. The first thing I want to focus on in today's market update is the Russell, right? So looking at the Russell, what do we see? We see that the Russell, and this is actually really interesting, right? Because we're seeing that a lot of the indices are really like, what's going to happen here next with a lot of these indices? Okay, so like such as the S&P 500 and the Dow and the Nasdaq, it's like, where are we with the overall markets? But the Russell of all markets is actually not looking too good at all, right? If I squeeze my charts up, look what the Russell's doing. The Russell is saying there's actually something not right here when it comes to the actual Russell market, the Russell chart here, right? So we have possibly that through there, maybe even that through there, right? So let's actually use that. It's more like an area, right? It's like that through there, I would say. Maybe even that through there. Yeah, something like that through there, I would say. That'd be that level. But as you can see, right, the Russell of all indices, like, is the Russell giving us a bit of a clue of what's coming up with the other indices? Because the S&P 500 and especially the Nasdaq, they're like, oh, they're starting to potentially gain a bit of strength behind the markets, right? It's like they're gaining a bit of strength there. What's going on? What's going on? What's going on? What's going on with that? So, but looking at the Russell of all the markets, guess what? The Russell is going in a channel. And if the Russell starts to break down after the good old Easter bunny break, right? Don't have too many Easter eggs, guys, all right? Every Easter egg you eat this Christmas, you have 10 minutes on the treadmill, okay? That's it. 1 Easter egg, 10 minutes. Or at least 10 push-ups. You know what? Probably one person who's going to watch these videos is probably going to do that. It's like 1 Easter egg, 10 push-ups. 1 Easter egg, 10 push-ups. 1 Easter egg, 10 push-ups. You have like a huge chest come next week. It's like, what happened to you? Oh, this is called an Easter egg hunt chest pump. You probably get a really big chest pump too if you did that. Like have 20 Easter eggs and you have all those push-ups. Oh my goodness, all that sugar in your chest would be, super pump. Anyway, so looking at the Russell, if we do break that, then this is what's called a channel projected target. What I say about that is that a lot of the times when we see channels, we see it and then it gives us a good chance of the market actually running towards something, right? So we have that through there. And if we bring this down through to here, I call it a channel projected target because wherever it breaks out, on a bare minimum, we're likely to get down to the next level, which is what? The next projected target in the markets there, right? So this is the next projected target to the markets. Sideways, and then if we do get a good breakdown bar, then we're likely to see a follow through. Now the question for you guys, I want to ask you good old bumblebees in the chat box below, my little fellow bumblebees. Is the Russell right now, because the Russell's still looking quite weak compared to the other indices, is the Russell right now giving us a bit of a leading indicator, a leading clue that there is still more weakness to come out of the actual stock market? And the reason why I mentioned that is because if we look at the S&P 500, right? We look at the S&P 500 and the S&P 500 is potentially starting to gain a bit of strength. Now we are still really overall sideways in the S&P. We haven't broken up. We haven't broken down. Nothing to there, okay? Now, by the way, guys, when we're talking about that, looking at those things, if we come down through here and then break that level through there like that, guess what? No, because the shoulder, head, shoulder formation for me, right? That'd be shoulder, head, shoulder, and then a breakdown from there, breaking out of that level there and breaking out of that level there. I don't care if Jerome Powell says, that's it. We're coming to the rescue, right? No, right? No rescue, right? Because then we'll probably see this market actually have another move on the downside, right? And then maybe that's the next move. So this is where we have to be very cautious not to be putting too much bias on the markets right now, because guess what? Market's going to go up, market's going to go down, market's going to go up, market's going to go down. So we can't be so biased, because when we look at the S&P 500, we're starting to get some bullish tendencies out of it. But we look at the Russell, guess what? The Russell's doing what? The Russell's like, oh, we're getting some really good movement on the downside. Right, so the Russell could be leading us the way on the downside. Make sense, guys? So before I actually get into the banking sector, let me actually talk about the banking sector here. One thing I want to talk about, guys, is that you see me do my market analysis here, but I was just doing some live sessions with my private clients. And by the way, if you want to become a private client of mine, where you get access to my trading system, my trading strategy. And I'm going to coach you basically every day, and you can actually watch me trade live every day. Then there should be a link in the description. I think it's the second link in the description, or go to getjohnshelp.com. Go over there right now, fill in the application form. After you fill in the application form, on the very next page, after you fill in the application form, you will book a call with me, so you'll be able to speak with me personally. Secondly, on the actual phone call, even if you're not a good fit for the coaching program, which by the way, 80% of people who I talk to, I don't even offer it to them. But even if you're not a good fit, I'll be able to at least give you some guidance on what you need to move forward. And then thirdly, after you click the submit button on the application form, on the very next page, you're going to get what I call my master breakthrough trading course for free, absolutely for free, to help you out, to get you started straight away. So even before we actually start to talk on the actual phone, you're going to get instant access to that. So if you're looking for if you're looking for a really good high probability trading strategy, if you're looking for scanning the market, if you're looking for scanning technology to help you find these amazing high quality trades, have me there showing you the exact trades that I'm taking every day, and also my long-term investing trades, then go to that right now. Go fill in the application form. You'll book a call with me personally, not a support team. It'll be me personally. And then on the very next page after submitting that, then you can actually then go get the application form. But if you're not interested in the coaching program and you just want to get a good free trading course to get you started right now, then that johnsfreegift.com, or that, I think it's the first link in the description there. So you can go to that. Yeah. So anyway, guys, let's go have a look at the financial sector. And I want to talk about something here. So yesterday's video, when talking about the financial sector, okay, the financial sector, I said that this banking crisis is going to equal opportunity, and the opportunity was a potential really good shorting opportunity in the markets. And that's what I said in yesterday's video. And then I had a lot of people come out and say, John, you have no idea what you're talking about. They just come out and said they're not going to let the banks collapse. So they think because Jerome Powell and the Fed and, the powers to be came out and said, guess what? We're not going to let the banks collapse. We're going to protect them all, right? Therefore, the stock cannot go down 10, 20%. Surely the market's going to go up because of that news, right? So why would the market go down? It doesn't make sense, right? And then they go through this whole rational rhyme or reason on a fundamental of why a stock can't go down 10, 20%. Because the government's not going to let the market, the banks collapse. By the way, guys, just because the government doesn't want to let the banks collapse doesn't mean we're not going to go down and up and down and up and down and up, right? Look at the financial. Look at this here. Through 2008 to 2019, right? We had what? We had almost a 30% downward move through here, right? We do get pullbacks. We do get drops. Now, that's a really big mistake. If you're trading the markets, if you're an active trader, if you trade the markets, if you're using that as your backing stop of you entering the trade, you are a moron. And I'm going to be really harsh with you. You are a moron. Trading is not about your thoughts or what you think is going to happen. Trading is all about probability. And how can you trade something that has a probability of a one thing? Well, I'm going to go long the financial sector right now because the government's got the backing stop of the banks, and they're not going to let the banks go down. Okay, that's the trade today. What about tomorrow? Right? We must be consistent in our approach. When I'm trading the markets, And I'm very, very, very consistent on looking for the same type of setup every single time. So when you're trading the markets and you're getting involved with the markets, right? And you're trying to understand the markets and trying to trade the markets, the worst thing to do is thinking. And now what I mean by that is that, well, you think, well, I heard this on the news today, so I think that's going to have this effect, so therefore I'm going to go trade that. Wrong. Trading the markets is a technical approach. Technical approach. Trading is all about waiting for pattern recognition, waiting for your setup, and then trading it. Not listening to a news and hearing something on the news and then going to trade it. No, that's potentially using a fundamental which may or may not already be baked in the cake.